Did the global Monday blues spill into Tuesday? This is Market Pulse. Allow me, alongside our market analysts, bring you a comprehensive breakdown of market activities today, straight after close of market. This is Market Pulse on News Central in partnership with Nairametrics. Welcome. I am Joanna Mustapha. And on the show today, US stock markets, we know they sneezed and the market all over the world caught some sort of cold. How are markets in Africa, and more specifically the NGX, responding? Is it too much too soon, especially with the social unrest we've seen of late? As well, Dangote is getting more media attention. We can't say exactly that it's good attention. The latest rating firm, Fitch, has downgraded Dangote Industries Limited. So we'll get into that. And later on, David Olujumi will be joining me. We'll take on the first reactions to windfall tax from key figures in the 3 Nigerian banks. But first, let's see how traders engaged the Nigerian Exchange today. We know that a lot has been happening on the global stage, right? Global stock markets yesterday, Friday, but we're seeing more green today across the global stock markets. However, the NGX, the case is quite different. Large stocks are biting the dust, literally, right? Today, BUA Cement, the fourth largest stock on the NGX, lost about 10% of its market cap. So we saw the NGX basically fall to its lowest level since late January, right? We keep breaking those records. Its all-share index falling 0.67% to 96,000. We were once 100,000 just a week or just over a week ago. But now we're at 96,928.52. Other markets across Africa, though, are recovering from the global stock sell-off. Other markets, also hit new lows, but NGX doesn't seem to be doing so. In the NGX, we're seeing Academy Press, NASCON at the top of the gainers chart with 10% gains each. Oando, can't quite explain it, but they are also top gainers today. That stock seems to be riding the wave with everything that's happening in the economy. Oando also a top gainer today. Let's move now to the top losers list, if I can get that up in just a bit. Right, we're moving to top losers. 2 weeks ago, it was Dangote Cement. This week, apparently, it's BUA Cement with a 99.9% loss. A 9.99% loss, I beg your pardon. Eternal PLC has also not really had the luck of Oando within the same industry, but they're also posting losses at 7.37%. We are seeing Eternal there, number 4, down to 17 naira 60 kobo. That's where they are at. A lot of sell pressures as well on Fitch Health, which lost 6.78%, down to 13 naira 75 kobo. Top movers today, we're seeing UBA, Oando as well, Veritas Capital Assurance, Sterling Nigeria, and Access Holdings. Coming to the currency markets, we've seen African currencies still trying to recover from yesterday's losses. Yesterday, the Egyptian pound fell to its lowest level since the devaluation of its currency in March. Today, it has appreciated just marginally from that level. The Kenyan shilling is also trying to appreciate marginally from yesterday's hit, and the naira is still on the bounce back, right? The naira is still trying to bounce back from the 1,600 level. So we'll see how far it goes. But joining me for market breakdown after the break is lead analyst at Money Africa, Onome Ohovoriole. Stay with us. This is Market Pulse. Right now, we're picking up the pulse of the day with Onome Ohovoriole, lead analyst at Money Africa. It's great to have you join me.
How you doing?
Yes, very well, thank you. Great to have you in, Onome. So yes, a global stock market crash, meltdown, bloodbath, what haven't I heard, right? What are you calling what happened and, what has been happening in the global stock markets so far? Are you also tagging it an overreaction as some have done lately?
I mean, I won't say it's an overreaction. It was kind of expected. The problem was the magnitude, right? So you have two factors that caused this. You had the Japanese central bank increasing interest rates out of the blue to deal with their inflation. You had negative economic data from the US. Unemployment figures came in a bit higher than expected. So you also had the markets a few weeks ago. The US market had been breaking record highs, so it's just kind of normal that when you have highs like that, you'd have a pullback at some point. So really, everyone had expected this. The problem was the magnitude and all that, and you can't predict magnitude when it comes to pullbacks and corrections in the stock market.
Yeah, so market correction going on now, and especially with the hype and somewhat overcharged over the past couple of months. Now, I mean, how have we seen this impact markets in Africa and the NGX, especially with the unrest we've seen of late in Nigeria? Is it too much too soon for the NGX?
I mean, at some point in time, I'd expect that it would filter here, but really, for the NGX, even though it's much more interconnected with the global market compared to where it was, say, a decade or two ago. But we are dealing with our own issues right now. I don't think the protests yet or have had a negative impact on the market. The drivers or the factors to look at affect our market primarily at this moment are where is inflation, where is the exchange rate, where are treasury bills going and all that. So really, at some point in time, maybe by the time the US cuts interest rates and all that, then you might see an effect there. But right now, not yet.
Okay, and of course, we're expecting those rate cuts come September, so we'll see how things play out. But coming to Nigeria, of course, there are more woes for Africa's richest man. Fitch ratings firm, they have downgraded Dangote Industries Limited long-term rating to B+. Is it a well-informed downgrade from Fitch? And what is informing this decision?
Okay, so essentially, the company is in a tight spot. They have dollar debt they need to pay down. That's due in August. And they don't have the dollars to pay down the debt. Two is you have the movement in the exchange rate. And so because most of the income is in Naira, but the debt they borrowed is denominated in USD, there's a mismatch. So really, it was expected. And in fact, I would argue probably that these numbers came in a bit late, because if the debt is due for repayment in August, then ideally the re-rating probably should have come in a few weeks before now. So it's in a way it's kind of expected, because it was clear that there was difficulty in accessing crude oil. Your receivables or your earnings are in Naira. You've had a sharp devaluation. So it's in a way it was kind of expected that this would happen.
Yeah. And I mean, with all that's ahead, with the refinery, their products is apparently set to hit the Nigerian market this month. There's also a proposed listing for Q1 2025. What potential impact could this have, especially on investor sentiments?
I mean, first is that investors have always reacted positively to when you look at companies, other Dangote companies listed, sugar, salt, cement, reactions have been good, but those are different markets, right? I mean, you look at the refinery, for instance, it's not going to be paying dividends anytime soon. So even with a Q1 2025 listing, Nigerians are not very interested in stocks that don't pay dividends. And I honestly have my doubts as to if that listing would hold on time, because the biggest issue that this refinery needs right now is that they need dollars for capital, working capital, and they don't have that. And they also need to access as much crude to process. The refinery is just at Fitch says about 50% capacity for such a huge refinery. That's really poor performance, and
Yeah, I mean, there's a lot they're grappling with right now. We'll see how things unfold this month and the months ahead. Let's come to the fixed income side of things. They also, I mean, that side also apparently seems to be catching some sort of a cold with selling interest predominantly seen with treasury bills. We're seeing crunching sell-offs as well, witnessed in the OMO bills market. After, some are describing what's happening there as a failed primary market auction. What does this perhaps suggest about how investors, both local and foreign, are positioning across the, debt securities?
The deciding factor will be where July inflation is going to be. But with the auctions, what you've seen is that investors probably expect higher rates. And so if those rates don't come in as expected, then everybody wants to sit on the sidelines till when inflation numbers come up. And if inflation keeps going up, you expect that at some point in time, you would have your interest rates, you would have the rates on T-bills, and all will go up as well. So really everyone is just sitting on the fence, and at 30 plus inflation, where T-bills are barely 21, 22%. We still have a long way to go. Really, those returns are not yet positive by the time you take inflation into consideration. So they're okay. They're double digits. They're the best you can do in this environment. But really, the market expects more, and then you have uncertainty. So what people want to do is sit on the sidelines and wait till where the next inflation numbers are, then decide what you want to do.
All right, and I guess they'll be out around the 15th of this month, so we'll see, how that pans out as well. Thank you so much for joining me on Omer Ohovoriole, the lead analyst at Money Africa. It was great having you in.
Thank you for having me.
Yes, always a pleasure. All right, up next, of course, we will be spotlighting the windfall tax. It's been a part of the conversation for quite a while now, but we're getting reactions from, chairmen of, banks, some of the leading banks, UBA, First Bank, and we're also getting reactions from First Bank FCMB as well. So we're going to take all of that. David Olujimi will be joining me, so stay around for that. You're tuned in to Market Pulse. We're spotlighting reactions from particular Nigerian banks, of course, in response to the windfall tax. Of course, windfall tax. No bank has released any official statement on the issue, but we have the chairman of FBN Holdings, an acclaimed strongman of the financial and capital markets, Femi Otedola. He has thrown his weight behind the implementation of a windfall tax, emphasizing its importance in creating a more equitable economic environment. The billionaire also called on banks to halt extravagant spending on private jets, urging a focus on operational efficiency and customer care. Also, UBA Group Chairman Elumelu also expressed his support after a meeting in Abuja last week. But then Mustapha Chikeobi, the chairman, Bank Directors Association of Nigeria, stated on his official X handle, and I'm quoting him now, "I have read the personal view of some bank chairmen on the windfall tax issue. Those views do not represent the banking community, and BDAN will communicate its view after our board meeting on the 12th on this and other very important issues concerning our community." So that's the chairman of that group. On the other hand, the group CEO of FCMB Group, Ladi Balogun, at the group's Facts Behind the Offers last week presentation, while referring to the 70% windfall tax, he stated that only about 10% of the bank's foreign exchange gains recorded in 2023 are realized. He went ahead to establish that the tax would not impact significantly the bank's capital on its earnings. Joining me now to provide more data and context to these developments is the financial markets analyst, David Olujimi. Great to have you in.
Thank you very much, Joanna.
All right, let's get straight into it, right, and what's happening here. We know that there has been a lot of conversation around the windfall tax. How important is it, taken from the statement of the FCMB, the group chairman, what he said, how important is it that there's that differentiation between realized and unrealized gains in the course of implementation of this windfall tax?
So one thing I've said before is that I've always said this thing. This is at this point when the federal government came up with this policy. I don't know whether they knew. I'm sure they know. Then they will understand the reason why banks employ a lot of accountants. Because from the statement of the FCMB chairman, we're already seeing he's already coming out to say, okay, just 10%. And of that 10%, he already said he made a statement about something between when he was making that statement. He talked about the fact about how their FX gains are being used to cater for impairment. Then he now said the net FX gain is about 24 billion. Then he said of that 24 billion, then he said about 10% of it is realized. There's a lot of accounting jargon. In First Bank's case, we've seen a case where First Bank recorded a net FX loss in FY 2023. So we've seen other banks, all of us, we've come up with figures. These banks have recorded 2-point-something trillion naira from FX gains and all. But now at the point, realized and unrealized. I'm sure accounting students in university are probably going to be taking courses on realized and unrealized gains.
Indeed.
That's one very, very tricky part of accounting that we're going to get into right now.
Yeah. How does also the sentiment from, the FCMB's group CEO about, the percentage of, that can be taxed, right? How does it affect investor sentiments? How have we seen it affect investor sentiments?
So basically, he made that statement at fact behind the offers. He was trying to get investor sentiment on his side.
Right.
So basically, everybody's trying to get investor sentiment. He was trying to tell the investors, don't be bothered. Our bank is doing very great. Whatever FX gain you see, that was one of the major agendas. Because I followed that session live. It was the first major agenda he laid on the table. He said, talking about FX gain, let's put the numbers out there. This is what we have, and just 10% of it is realized. So basically, making statements like that is going to guide investors in saying, okay, this bank is... Yeah,
and that has worked for the bank.
So one thing is that issues have been raised about I think it was Moody's rating that said about a particular percentage of banks' equity, their total equity, is going to be used to sort out this tax. So everybody is sentimental, everybody is skeptical. That's the exact reason why banking stocks were crashing, because there was this sentiment around, where are banks going to get this money? They're obviously going to have to take out of proposed dividend payment and all, to finance this particular tax. But now these banks are coming to tell us that everything is all good.
All right. I mean, we'll see how this all pans out when it comes to implementation. Finally, before I let you go, Otedola, he also made a statement about how banks are spending in the extravagance, how they're prioritizing personal gains above, their duty to shareholders and the customers. What's your take on that?
This is a dicey situation. This is the number 4 richest man in the country talking about banks using funds, using profits to... He said a lot. Who am I to speak on this particular issue? Because it's a lot.
All right. Thank you very much, David Olujimi, for joining me and sharing your perspective. Up next, we are heading to the African markets. We are seeing some sort of, is it bounce back or recovery from reactions to, what happened across the globe? We know that Africa was also had its part to play in it as well. We saw the GSE, although has continued its downward trend, down 0.69% today. Morocco's up, Egypt is up. Nairobi is back up. Ghana is still heading down, 1.59% today. We'll continue to track what's happening across all markets right here on Market Pulse, but that is your show for today. As I did say, we'll continue to track the pulse of the markets, 4 p.m. West African time, every weekday. It's Market Pulse here on News Central in partnership with Nairametrics. Until tomorrow, keep it peaceful and stay safe. Now to the global markets.